Hello, today we're going to talk about how to use previous lows as support areas. Now, first of all, why do we want to learn about support and resistance? We're going to be dealing with support. You want to learn about support because, first of all, you want to know when the stock stop dropping. And secondly, with this knowledge, you can learn to place a trade that can actually buy the stock when it drops to a previous low. Now, for those of you who do not know about support and resistance, previous lows can actually act as a support area. Now, this stock, Amgen, it has gone down bottom, make higher highs and higher lows, and then it rose up to here. Now, what happened after that is it declined to here, and then very bearish bar here. Suddenly a green bar came, and then it went all the way up here. But of course, stocks do not go up in a straight way. Sometimes they go up zig and zag, and eventually there will be corrections and drop. Here it had a nasty correction, but as it dropped to this previous low area, it formed a bottoming tail, and after that a green bar came and it went back up and eventually recovered all the losses, and it even made another new higher highs here. So the previous low can act as a support, and when you see the stock dropping to an area of support and forms some kind of bullish reversal candlesticks, right, it can actually be a buying point for you. Now, one thing to note is that support is an area, it's not a definite price. So, does not mean that the lows here, the stock will stop dropping at exact low. Sometimes it may drop a bit lower, then go back up. Or in this case of Amgen, it dropped to here, which is a bit higher than the previous lows here, and then it formed a bottoming tail and moved back up. Now here is an example of Broadcom. It had a very nice rise, and then it started to trade sideways. But before the sideways trading, it actually made a previous low here, and then it went up, kind of make a rounded top, and then dropped to here. It tried to find support. Eventually it go a bit lower, but it was able to find support at this previous low area, and it went back up, and then it drop again to slightly below the previous low here, but eventually it traded sideways and went back up again, and then it corrected and also stopped dropping around this previous low area. So if you were a trader and saw the stock drop to a previous low, you might want to look for buy setups. For example, here when the stock dropped to the previous low, you might want to look whether there is a break of a downtrend line. You could take a trade here, put a stop loss here, and have a swing trade. And here also it dropped, then it formed dojis and small bottoming tails. And you could zoom in into the 60-minute chart and see whether it breaks a downtrend line. The moment it gaps up, you buy it and put a stop loss below the previous lows here and ride it higher. So this is an example of how you can use previous lows as trade areas. Now, Baker Hughes, stock rose and then it corrected, and it quickly went back up, but this time when it corrected, it was not able to hold the support. The first time it tried to rise, the second time it tried to rise, but eventually the support broke. So this principle of support, previous low as a support, sometimes when it is tested multiple times, especially second time or third time, you want to be aware of it. And especially if the stock fails to make new highs, that means there's a new high here, it failed to make a new high, it failed to go above the highs of this swing high, and when the stock tests a previous low support, sometimes it may fail because the trend is already weakening, and although the stock rose and went back above support, eventually it went down again. So if you see a stock testing support many times, eventually it might break. Now here's an example, Cadence System. The stock kind of trades sideways, but there's a previous low here, and then it went up and quickly corrected. And as it corrected to the previous low area, it formed kind of doji pattern right after a very large kind of Japanese candle bar. It formed kind of doji pattern, and then a smaller red bar, and then another doji. Well, this tells us that bearish momentum is slowing down, and you might want to look for the beginnings of a bounce back up. Zoom into the lower time frame, and maybe you can buy above this doji, put a stop loss here, or below the entire previous low here, and write it higher. So the last example I want to show is Constellation Energy. The stock kind of make higher highs, higher lows, higher highs, drop, and then went up and made the low here, and this stock went back up, and then it had a nasty correction, very red bar, big red bar, another red bar, and then suddenly a small green candle appeared near the previous low, and eventually it shot back up, kind of drifted sideways, but this time as it near the previous low, momentum slowed down, a bottoming tail form, a doji kind of bottoming tail form, telling us that bearish momentum is slowing down. And then a nice large green candle form. And when you look at a stock dropping to a previous low, sometimes you can see chart patterns like double bottom here. And what you can actually do, you can buy the stock when it trades above these two bottoming tail kind of pattern, put a stop loss below here, or if you're less aggressive, you can look for a break of a downtrend line. You can buy here, put a stop loss here, and ride it higher. So I hope this short lesson is valuable to you. If you find it helpful, please like this video and subscribe to my channel for more lessons like this, and I'll see you in the next one.